monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider monochrome.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's check what happened overnight. Positive investor sentiment lifting global equity markets. This follows US President Joe Biden's decision to end his bid for a second term and endorse Vice President Kamala Harris to take on Donald Trump at November's election. Investors on Wall Street returned to the mega-cap growth stocks ahead of their earnings results, helping the major indices recover from last week's sell-off. Alphabet, Meta, and Tesla all advanced after dragging on the market last week, and Nvidia also rose on reports that it's working on a version of its new flagship AI chips for the China market that would be compliant with current US export controls. Shares in cybersecurity firm CrowdStrike slumped further after a software update from the company triggered Friday's global tech outage. Delta Airlines fell after cancelling flights as it still struggles to restore operations after that outage. Verizon Communications fell heavily after a second quarter revenue miss, and shares in toy maker Mattel surged on a Reuters report that it has been approached by buyout firm L. Catterton with an acquisition offer. Well, investors have unwound some of the so-called Trump trade in the wake of Joe Biden's exit from the presidential race. Long-term yields had gained after last month's presidential debate and the assassination attempt on Donald Trump, which increased expectations that he would regain the White House and that his policies would be more inflationary. Joe Biden's decision to step aside and endorse Vice President Kamala Harris has increased uncertainty about a Trump victory, with betting markets now pricing in a Trump victory at 60 cents, while a win by Harris climbed 13 cents to 38 cents. Kamala Harris is now moving to lock up the Democratic presidential nomination and has secured the key support of former House Speaker Nancy Pelosi. Well, the yield on the 10-year note was up slightly at 4.26% and the 2-year at 4.52%. The US dollar, a little changed. The Aussie is down at 66.4 US cents. All right, let's get across what is moving now on Wall Street. Howard Silverblatt joining us from S&P Global. Howard, good to catch up with you. Plenty happening, lots of action. A bit hard to know where to look at the moment, isn't it? But of course, we did have that global tech outage on Friday, but more immediately, markets clearly reacting to that news that Joe Biden will not contest the election and backing Kamala Harris. How did you see that reaction?
We didn't see as much of the action yet as you would have thought. As far as the Trump 2.0 positions, and those are the stocks that will be going up, we did see a few of them start to go down, but only a tick. The situation has changed. Well, as you mentioned, Trump is still the favorite to take the White House, but the question is, what happens with the House and the Senate? The pen is very strong, and a lot of expenditures are just by signature and legislation is the key part. So the concern was that Biden would potentially taken and lost the House and the Senate, and therefore we saw Wednesday, Thursday, and Friday were uptick in stocks that would benefit if the Republicans took a sweep. The street took a step back from there, still stayed with Trump, but is looking at it that they have to reevaluate depending upon who she picks. And again, she has to still get the nomination, and then pick to see how much of the House and the Senate, which way it'll go. So that's really one of the key items in there. She's still an underdog by several points, but again, we haven't seen any polls post Sunday, yesterday when the announcement was made. So we'll have to see how those come out. But again, the market itself was good. We were up over a percentage today. It was not as broad as we wanted it to be, but you saw the small caps go up. IT went up, as you said. Most of the Magnificent Seven went up, a couple ticked down. Apple, as an example, and Amazon were ticked down, but Tesla was up nicely as well. Some other ones in Nvidia as well. So it was a nice gain and forward. And what's propelling that, our earnings are coming in very good. And again, the expectation that come September, we are a quarter of a point lower, which should help small caps more than the big cap.
So as we were talking about there, obviously the mega caps fairly strong today. That is ahead of some key earning results from the Mag 7 coming up, of course, Tesla and Alphabet this week. What have you seen out of earnings season thus far, Howard?
Earnings season so far has been very good, and the expectations are good. They were taken down a tick, but they pretty well stayed there. So far, we've got about 15% of the market has reported. The numbers are ahead of where they were expected, and more importantly, we don't have a lot of negative guidance. The guidance has been somewhat positive. The two key sectors we're looking at are information technology and financials. And most of the financials that chart shows have reported, and their guidance was cautious but decent going forward. The two sectors both contribute about 19% of the earnings to the S&P 500. So they're about equally, yet technology is selling for 28 PE based on 2025 earnings. Financials are 15. So again, you are paying significantly for technology, which went up nicely today, by the way, as compared to financials, but they're both contributing the same. Overall, we're looking for a record for this quarter. The second quarter should set a record for earnings, about 6% above the last quarter. Sales are up, but still about 2 or 3% shy. The takeaway for the earnings, I think, this quarter looks like margins. They are going to be over 12%. 12.14 is the estimate, but the average is under 9% a quarter. So the margins are running very high at 12%. Companies are making a lot more of what is out there, even though they've started to pull back a little with sales. Consumers are spending. We saw retail numbers going up. The CPI numbers was going down. We'll see how the GDP goes later this week. But the economy is still strong. And again, expecting that the Fed goes down a quarter of a point, the economy is good.
Yeah, well,
profits are good.
Speaking of the Fed, Howard, of course, meeting next week, no change expected.
Next week.
Eyes very much on that September meeting, though.
Oh, it's amazing that it's hard to even find a bet that they will make a change in the July meeting, which is next week. But the September one, it's up to about 93, 94%, depending upon the tip. So that's very high. Obviously, some of it is trading, going back and forth in the instruments. But the expectation is that it is going to happen for the quarter of a point. And if it doesn't, there will be a major disappointment if this situation does not go. It will be surprising if they do it next week, but everything is based on September now. And there's a good deal of belief that a second one's going to come after the election, probably after December one. So again, interest rates should be going down. We have seen that 10-year and interest rates go up the last couple of days. We're back, but only on the 10-year to about 425, 426. It was at 4.7 a couple of months ago, but last week it was 415, 416.
Howard, when we look at the equity market at the moment, how are you judging those valuations? Let's take a look at the S&P 500, certainly in terms of sector values at the moment. Are you seeing that as being sustainable?
If we get the earnings we want, yes. We are still paying a lot for expected earnings. I mentioned how tech 28 on a PE. I mean, that's enormous to pay for earnings a year and a half from now. So the expectations are high, and that's again based on lower interest rates, as well as that the consumer is going to keep spending as they have been, as well as the government keeping to spend. But the market still is top heavy. Again, technology is there. Real estate has turned positive, so they've come back, but they're still down about 20% from the end of 2021. So they are still, shall we say, on the low side and still expected to have a lot of headwinds going into this year. There's a lot of refinancing for real estate. There's very high liquidities. If those rates don't go down, it's going to hurt them even more. So that profit would turn to a loss this year. But again, they are at least showing a positive number year to date.
And Howard, what are you seeing on the commodity markets at the moment? Very much under pressure at the moment. We've seen copper come off quite significantly.
Copper's gone down. Obviously, gold is off its high. Gasoline has been coming down a little. Oil is under 80 at this point. It wasn't long ago, but there was a lot of option trades for oil at 100 at the end of the year. A lot of positions were taken. There's going to be a lot of money lost on that if oil doesn't move back up. But yes, we're definitely seeing that at this point in time. And again, depending upon who gets in, we could get a lot more drill, baby, drill. Looking if you get more Republicans or the White House, as well as potentially, let's say, the Senate, which would add to the supply situation and even keep it lower. If you get a more a Democratic side, the energy issues will look like they'll have a little bit difficulty because there won't be as much drilling. It'll be more advantageous for the EV situation because those credits would be extended. But energy is very dependent, the specific issues on who's going to get in and what the makeup of Congress is going to be.
Mm. And given all that uncertainty at the moment, Howard, how's the volatility index responding?
Not as high as you would think. It is up. People use it for instruments in order to hedge certain positions. So we're seeing that. We're seeing that somewhat in the interest rates also. That's what part of the additional trades that I said in the interest at 10-year rates, concern over that. But the volatility, the intraday volatility is definitely increased. We're seeing more spreads on there. We're seeing more issues diverse, and we're seeing top-heavy situations. So volatility definitely is higher. It's not the way it was a couple of years ago where you were up in the morning 1% and you close the day down 2%. But we're still seeing a bunch of volatilities. But again, we're in the middle of earnings season, and you would expect to see that. I think you'll see more volatility once Harris comes out with the VP, and you can better size up what the election is going to be, and you'll see how the Republicans answer that. So again, there's a lot of money sitting on the side, both to take positions for the outcome of the election, but also in money markets. About $5-6 trillion of extra money is sitting there. Remember that 3-month Treasury bills in the U.S. is still 5.3%. That's a nice return to get 5% and still be able to sleep every night. Again, you're not keeping up with the market, but you're not watching the trades up and down, and not everyone feels lucky. So there's a lot of money on the side that could potentially go in if investors want.
It is a fascinating time. Howard, great to catch up with what you're seeing there. Thanks for joining us on S&P Global.
You have a good night. Good day. Good night to me.
Cheers. Thanks. All right, that's Howard Silverblatt out of the East Coast of America. All right, just before we go, let's check the local market. We are expecting, pretty much to wipe out those losses we saw yesterday. So SPI futures sitting up 0.7%. Stay with us because the open is just a couple of minutes away.